Hello and welcome everyone to the Wall Street Blockchain Alliance's Crypto Roundup for January 5th, 2024. A new year has begun. Ron Quaranta here with my amazing co-hosts David Brill and Josh Klayman, the trooper dialing in from her limousine, I believe it is, somewhere in the heart of New Jersey. Good to see you both. Before we begin, thank you all for joining us on LinkedIn Live and on X. If you have questions, please do submit them in the chat for us. Our usual disclaimers, please do keep in mind that nothing discussed is accounting, investment, legal, or tax advice, and that obviously the things that David and Josh and I discuss are our own personal opinions and perspectives and don't necessarily represent those of our firms. A new year has begun. David, Josh, welcome back. It's good to see you both. The only countdown for us more important than the countdown to 2024 on New Year's Eve, apparently the BTC ETF countdown that is still ongoing. David, I want to start with you if we could. Let's go, around the horn on all of the topics that we've got going on. Lots of important stuff, and this countdown is important, isn't it?
Yes, it's really important, and it's been a focus of the crypto community for the last few months, and really mainstream media has really covered it very well. So I think in this episode, we're going to spend some time talking about, well, why is it so important? What does the landscape look like now, and what do we think the landscape will look like after a potential approval?
Perfect, David. Thank you. And Josh, I know you've been traveling a bit. It's good to have you back. I've got to assume some level of the conversations in your world are also tied to the Bitcoin ETF and the mayhem that may or may not be happening in the approval that may or may not happen. What are your thoughts about how important that is?
I mean, how important the talk is that's going on, or how important the ETF approval is?
Both, I think.
So I would say, the talk in and of itself, the buzz is important. I mean, that's, I think, what keeps people motivated in part. Like we always say, builders keep building.
Right.
Well, yes. And because hopefully at the end of the long tunnel, there are bright points, right? As you're working hard in the trenches, so to speak. And I feel like the Bitcoin ETF, after, a really wild couple of years, is a bright spot, right, among many that people are looking for. And so I think there's a lot of excitement about that, and I think excitement is good for our industry. Obviously, not irrational moves per se, right? But I guess I say that just, none of this, as Ron has said, is investment advice. But yeah, a lot of excitement. And in terms of the importance of the Bitcoin ETF, I do think it is important just in terms of marking a meaningful milestone forward, right? At the same time, if for some reason, somehow it does not get approved, I don't think that's the end of the road for it. I mean, it just seems to be, we're on this incremental path.
And, Josh, thanks. That's a really interesting point. David, you and I talk about this, and we've talked about it several times. We see the street, there's the odds of a Bitcoin ETF being approved, 80%, 90%, depending on what investment house you're talking to. And these are TradFi firms weighing in with these percentages, David. There's a not insignificant chance that they all can be denied again. And I'm not sure how much import I give to this, but some folks in the media had pointed out that they're not going to be approved. And, there was some market sell-off there that we can talk about. What are your perspectives on that, David? Is that a reality, or are we looking at the potential that this might go longer?
Well, look, having worked on the first Bitcoin ETF filing in 2016, I think patience is always the name of the game. Look, I think after the Grayscale court ruling, I think the ability to push off approval of an ETF it's very difficult at this point. So if we didn't see one approved next week, I would say there might be one more iteration of meaningful comments that need to be made, and we would see one later on in the first quarter of this year. But I think I'm along with that group of people who feel that we're close enough along that this is going to happen shortly.
And David, for both you and Josh, I think there's this popular perception in the folks who may not understand how it works. And I want to give a bit of deference to the regulator here. This is not someone sitting behind the desk at the SEC, the chair, for example, saying no and putting big red X marks on things. There's a lot of granular work that has to happen. Specific forms need to be filed. Specific rules need to be determined, right, David? Specific execution facilities and participants in the marketplace and authorized participants. So there is a lot of work in the background there. And if I remember reading the news recently as Wednesday, these participants and these market players we're having these conversations with the SEC. Is it simply a matter of dotting the I's and crossing the T's?
Well, look, when a company goes public, there's usually a number of comments that go back and forth on what's called an S1. And so for these ETFs, we have an S1 for these ETFs. And, the iterations and the comments, there could be several or many versions that go back and forth and many classifications and clarifications. So I think with something as intricate as, crypto and Bitcoin, that part it makes sense. Custody of it, it's going to be on a cash basis. There are a lot of moving pieces and they require really refined writing and approval. And then exchange rules need to be made and altered to, affect the trading in these ETFs. So then that's called a 19b4. And then New York Stock Exchange has to change their rules, and other exchanges that are going to trade on this, will need to change their rules to accommodate this. So there is genuinely a lot of work to be done. A lot of work has been done, and a lot of work I think is probably currently being done. And who knows, comments to the S1 and the 19b4s are probably being done today, or was submitted today or yesterday, or additional comments. So it's a very iterative process. And for those who are, have practiced and have done, corporate work or done transactional work, you just know how many versions keep going back and forth. And so this is the same thing.
David knows of what he speaks. Go ahead, Josh.
I was just going to say, a lot of what we're seeing, and we've kind of chatted about this a little bit, although not in so much detail that I don't want to know more. But, in many respects, people say, like, buy the rumor, sell the news. Like, is that what we see in digital assets, or do we see something different when you guys are looking out at the market?
I'll start with that if I could, because this is a conversation, David, you and I had earlier today. I think there were these two camps that the price appreciation for a Bitcoin approved ETF is already baked in. We should expect a sell off. I'm going to take a little bit of a contrarian there, and David, Josh, tell me if you disagree. December was an awesome month for assets, TradFi assets, equities, or crypto. And I kind of feel like there was a little bit of let's take a little bit of money off the table. That being said, some folks coming out and saying the SEC will definitely disapprove or not approve an ETF might have been part of that steam coming out. But December was a great month. January, people needed to sober up a little bit and take some money.
Well, I also think there's always a lot of leverage in the crypto markets. And so, I think what was happening too is that everybody was just long. And, when you have some of these sell-offs, people's leverage positions get triggered and it sort of magnifies the loss. So I think what you really saw was, a report by Matrix Report, said they didn't think the ETF was going to be approved. And then you saw the sell-off. And then that sell-off got exacerbated by a number of leveraged positions getting washed out and stopped out. So, you saw something that went down, maybe $2,000, $2,500, like maybe 5%. And now it's slowly recovering, and it's probably recovered the majority of that. So, no, I'm not surprised. And look, you have a lot of wallets that are in very profitable positions. And when you have that, you are going to have some that take profits. We're also seeing a lot of Bitcoin miners who are selling and selling heavily into this rally, and probably looking just to bolster their capital positions. And we have the halvening coming. So there are these other external factors, but I think ultimately we're going to see a lot of price movement, and I'll talk a little later on about where I think there are different points we should focus on and be mindful of as we see sort of gyrations in the next week.
So one question kind of related to that. There was that headline, I think from Bloomberg, but probably others, about Cathie Wood and going big on Bitcoin futures ETF. Did that surprise you? Like, what can we make of that? I mean, if we have our crystal balls.
Well, it's very interesting. And I think we have to remember that Cathie is an institutional trader. And, we have a lot of retail traders and a lot of RIAs who can't trade. And actually, this dovetails well into the discussion I want to have. But a lot of RIAs can't trade these, futures products or commodities futures products. So they don't have access to those. So in Cathie's case, and I'm going to go through this a little more, Grayscale GBTC is trading at a discount right now to the NAV price of the Bitcoin it holds. And so what happens here is the discount has gotten small enough that I think Kathy decided that she didn't want to take the risk if there was some issue with GBTC being converted into an ETF. So she sold out of her position and then went into this Bitcoin futures position, so BITO. So look, I think it's a savvy move on her part. I mean, I'm not an asset manager, I'm not following all of her funds, but she clearly thinks that it's not worth having this piece of risk about the ETF being converted. And, she thought this was the better play. So it is interesting. She's also been selling a lot of Coinbase, as Ron mentioned to me.
Yep.
And this could be just another part of, we've had a very good run in 2023. And, some people wanting to take some chips off the table going into 2024.
Yeah, I tend to agree with you, David. Kathy is a very astute player in this space. I'm a big fan of hers, not least of which because in the early days of the WSBA, she was one of the original board members, Josh,
Yeah.
as you recall. And I think, she's very, very good at risk mitigation and understanding. She's very good at understanding something that a lot of investors have a problem with, David, which is when's the right time to take a little bit of money off the table and at what scale, which is critical when you're looking at that kind of institutional level engagement. I think it's a really good question, and I follow her pretty keenly.
And I think one other thing you have to remember is, like, as an institutional investor, like the tax implications are just totally different. Like they get factored into the returns, whereas like a retail holder, may want to hold for a year and get that capital gains treatment. That's not an expectation with an asset manager who's going to go in and out of position. So I think that's another thing to keep in mind.
And let's be candid, most retail investors, a la the folks using Robinhood to trade crypto, are not thinking about tax implications generally. They'll see 10, 20, 30% upside and, I made a lot of money, let me take it, which is really important. Josh, if I could, I wanted to weigh in with something, and this will be, wait for it, my first rip up the script of 2024. If we're talking about BTC ETFs, I want to raise something that I read interestingly, which might be a bit of an awkward conversation in the ecosystem, not necessarily for the three of us. When you look at these Bitcoin ETF applications, the custodian of choice for many of them is Coinbase. And I wonder, there was an interesting point raised, and we don't necessarily need to speak to it today. We should talk about it more deeply going forward. The concern about the fact that Coinbase is dealing with an SEC action while potentially being the custodian for the majority of the Bitcoin ETFs. David, is this a problem?
Well, it's a really dimensional question. My basic answer to you is, if it was a problem, all of these filers would have been told it's a problem and they would have had to find another custodian.
Right.
So I don't think we would be so far down the path with all these filers, with Coinbase being the custodian as an issue, because I think it would have been, communicated clearly prior to this. So on that level, for these filings, I don't think it's a problem. And like I said, I would have been communicated. On a broader level, I think the issues that the commission's having with with Coinbase and the issues that they're bringing up, they don't really relate to how, Coinbase is custodying the crypto assets. It's really how they view what the crypto assets are, how they classify them. So I don't view them in the same vein. I think a lot of us have a very distinct view on whether these, crypto assets are securities or not. But I don't think having that out there, prevents Coinbase from being a perfectly proficient custodian.
Yeah.
And if the FCC felt that way, I think we'd already know that.
Yeah, Josh.
So I agree with David, and I also would just think back to the SEC v. Coinbase complaint. There were no allegations in that complaint of, say, commingling of funds between or among Coinbase and or customer accounts, right? There were no allegations of that. So I do think it is separate. Yeah.
No, fair point. And again, with all due respect to Coinbase, I mean, there are they're not the only game in town when it comes to this. When you look at some of the other filings, I think BitGo is a custodian. BNY Mellon, I believe, if I recall, someone correct me, or someone in the audience correct me if I'm wrong, is a custodian in one of the filings as well. So a lot of important stuff happening. I guess one of the things we can round this whole conversation on Bitcoin ETFs is, well, twofold. I feel like we ended last year with predictions, which is funny, but I want to do one more prediction round. Does it happen in the next week, David? Do we blow by? And Josh, same thing for you. Do you think we blow by the January 10th deadline for, I think it's ARC?
I also do want to go into a little more about the difference between what's
Sure.
out there currently
Yep.
and what this will mean. So my belief is that we will see at least one approved next week. That's what I'm sticking with.
Josh?
So I guess just to be contrarian, just for purposes of this, just so we can have not the same view, I'll say maybe there's another delay of some sort, just because there's been so many delays.
I am going to go with Josh on this, and the reason for it is, and I know this sounds political, but it is a political election year. I think this gets pushed, and I think the current climate in DC is, let's push this because we don't want this in the hands of retail investors. I know that's a bit contrarian. First question coming in, Adam Goldberg. Shout out to our friend Adam who does our policy updates every month. Any traditional bank is severely constrained by SAB 121 and its interaction with Basel. Really good point, although I do wonder how much up in the air SAB 121 might be, given the GAO's perspective that it was actually a rule and should have been treated as a rule, and that Congress was not involved. It'll be interesting to see where that goes as well. David, one of the things I was hoping we could pivot to, and Josh, I know you always focus on the legal side, but I would love your opinion on some of this as well. We always look at the macroeconomics, David. So this morning I was fascinated. The payroll numbers came in the U.S., and I think the consensus estimate was 170,000 jobs. And of course, that number was completely blown away, something like 215 or 217,000 jobs, which rapidly turned into, well, the Fed's not going to cut interest rates and everything's terrible. And then everything kind of leveled out. What are your thoughts about the implications of these macroeconomic numbers? And I say it over and over again, David, you and I joke about it. Do we even bother trusting these numbers? They get revised every month.
Yeah, it's really hard to put credence in the initial monthly numbers. I think you really have to look at what gets restated a couple of months later. At first glance, I did notice that the number of full-time jobs, it seemed like were down, and that there was an uptick in part-time jobs, which sort of caught my attention. And also there was a rise in government jobs at the end of this. And so, I don't really know how they figure out government jobs. Did the government really go and hire on the state and federal level all that many jobs? Really hard for me to know, but those are things I was paying attention to. So I'm wondering if we did see a decline in full-time jobs, but kind of an increase in part-time jobs. And so that was something that caught my attention.
Yeah. When you break down the data, Bloomberg did an amazing job of reviewing the data. The majority of the jobs added, David, were actually state and local government jobs nationwide and not federal government jobs, which was interesting. But it'll be interesting to see what those revisions look like. And, it feels like there's a bit of this walking on eggshells trying to figure out what the next interest rate cut will be. But David and Josh, it brings us back to one of the other things we often have spoken about is, are lower interest rates the thing that something like crypto needs for that upward swing? Is it more nuanced than that? We could talk about the halving, we could talk about ETF approvals. David, Josh, are we going to be having this volatility for the next several months?
Well, I definitely think we're going to have volatility. I think if we do see an approval next week, I really am super curious to see, where the price action goes. There are a couple of bands that I've been looking at, like 45,500 or 48,000 on Bitcoin to the upside, 42,000 or 38,000 to the downside. So, I'm really curious to see, what happens, because also even when we get an approval, it doesn't mean that these products are going to be available immediately to all RIAs or to all retail. It's going to take some time. They're going to have to be reviewed. RIAs are going to want to make sure that they're suitable for their purposes. And so I think there's going to be a lag, but I do think there's going to be a lot of volatility. Another question is, are people going to take money out of altcoins and put it into BTC, or have they been doing it, or will they do it, this weekend or next week? There are so many dynamic angles going on. I think it's going to be really interesting.
David, and on the RIA thing real quickly, sorry, Josh, just on that point real quickly, I would also argue that the registered investment advisors, and there are thousands and thousands of them across the US, there's still the education component. There are still a lot of RIAs who simply don't understand the dynamics of BTC, let alone how they get involved in a Bitcoin ETF on behalf of their clients. Josh, go ahead.
I was going to just say something and it flew out of my mind.
Well,
So,
I will add that,
I,
oh, go ahead, Josh.
I remembered what it was, which was just, um, in the time when it's between, say, an approval and when people actually are able to participate, do you guys expect, again, not investment advice, but just with your crystal balls for the day, do you expect that people will continue pouring into Bitcoin in anticipation of when the ETFs actually become available?
Well, that is like, go ahead, Ron. I'll go after you. Go ahead.
It's a good question, Josh, and I go back to my original premise, and I'm not sure I necessarily agree with the depth and breadth of some of the commentary, but I think there's a fair portion of ETF approval that's been priced into BTC. I think we'll see a bit of a drop off. I don't think we'll see a collapse. I think the proof will be in the pudding as we begin to see institutional money pour in, as we begin to see the ecosystem of RIAs make it available. David, tell me if you disagree.
So it's really interesting. So I definitely think people have been buying ahead of this. And like my inclination is it's a sell the news event, but I also believe that it may take a little time. Like I think there may be people who have bought before. They want to see how much retail and institutional buying there is the first few days it comes out. And then they may just take profits after that. So I think it's sort of dynamic. But I mean, let's just look at it logically. If you had a chance to buy something before most of the public goes, has a potential to buy it, I think the behavioral instinct is, oh, I want to buy this early. I think poor people will buy it, and then I can sell it to them for a higher price when they buy it. Like, I think that's a very logical way to think about things, but I think it's really going to be dynamic. I think I'm really curious to see what the volumes are the first couple of weeks, because I think it won't be a true guide into how the success of the ETF will be, but I'm just curious to see like what is that immediate pent up demand to get access to this product.
It's also a generational conversation, and I use that word a lot, and I don't mean to overuse it, but there will be a difference between people funding their 401ks or IRAs this year in the next 2 to 3 years versus 20-year-olds, 30-years who are going to be funding 401ks and IRAs going forward and are looking for those numbers that say, wow, I can get a Bitcoin ETF and the returns are pretty decent. I could use that to diversify my portfolio. That's an important consideration as well. To me, it's the long-term game that's critically important.
And also, I think these are like conversations driven, with wealthier people about when they have conversations with their RIAs.
Right.
This might, they might not have a conversation until June or, at the end of the year. So this may not come up for a while. Like this may not be such an event that somebody who's got a significant portfolio is like, okay, I want to be in this immediately. Yeah. But, I think the younger cohort, who maybe don't use RIAs or, have, sort of building their assets, they may just jump right in and they just go on to Schwab or
Robinhood
Direct or Robinhood and just buy the ETF because you'll be easily able to do that in your brokerage account.
The Josh Coin ETF will be the thing that really propels the market. There's no Josh Coin for anyone in the audience. I'm totally kidding.
No, there's no Josh Coin. But I do have a question for you guys, and I love hearing you guys talk about this because this is not obviously my area of knowledge, and you guys are great at it. So I guess one of the things that I wonder is with respect to the ETF news or the ETF hopes. Mm-hmm. To what extent do you think that filters down to people purchasing? Like obviously large, institutions and other large, or I shouldn't say large, but people who've been in crypto for a while, people who have, perhaps significant buying power of one form or another, right? They may know that this is coming. But if you're retail on the street, like, do you know that there's an ETF coming, or you just see prices going up? And how much do we know how much of the increase in price and the buying is based on large institutions and whales, going, deep in that, or more dispersed at a more retail level?
So I to the extent I can answer that, I'll just weigh in. Like to me, the Bitcoin ETF world is broken up into two camps. The first is, and Tuan, thanks for the comment I guess there's a Josh coin. We'll have to take that up offline, Josh. I think there are two camps. There's the community in the world that is waiting for the Bitcoin ETF and has been talking about it since 2016, David. Back in the day when you were getting involved. I think there was a very large proportion of ETF customers or potential customers that don't know it until it's put in front of them as an option. And I think once that happens, that'll do a couple of things. It'll certainly open up a wider pool of potential ETF investors. And I would argue it'll smooth out the volatility. Because when you offer it as an option across multiple different generational aspects, today you can get an ETF on gold. Today you can get an ETF based on your age, based on your target retirement. Now imagine what you can see with a Bitcoin ETF that is available across wider platforms. I think this will be a very different conversation, Josh, in 2 to 3 years if it's approved this year. David, again, tell me if I'm wrong.
No. Look, I think Ron makes good points. I think also there's going to be a lot of advertising. I've already started seeing some advertising for the Bitcoin ETFs. So I think you're also going to see a fair amount of advertising, a fair amount of it on CNBC and Bloomberg. And, one thing that did crack me up is that I actually like Jim Cramer. I think he's done a lot to help retail investors get, more knowledgeable about investing, and he's got a kitschy show. But one of the things that's really funny in the community is that every time he says to buy Bitcoin, it sells off. And every time he says he's over it, it goes up. So he's really like an almost 100% indicator. And he had said, oh, I'm like super bullish on Bitcoin when it was around like 45 and change the other day. Then immediately it sold off like 5 or 6%. So
to David's point, for the audience who may or may not know, and David, you and I know this, there's an actual Cramer inverse fund or ETF. Basically, if Cramer says buy X, the fund will sell X, and people have made money alternatively on that
really
crazy world.
Really, really funny. One other thing I do want to mention, everybody, is that there will be some people who want to short Bitcoin, and the ETF will give them the ability to short the Bitcoin ETF. So it's not just a one-sided sort of bullish event. So just something to be aware of. It's not all long money. That there is some short money that will use a Bitcoin ETF as a way to short Bitcoin.
That's right, and in a way they weren't able to do without the ETF. At least for many retail,
and a much easier way to do it.
Yep.
So that's just something to be mindful of too.
Yep. Sophie, good comment. Our contrary oracle, and David and I at the next happy hour will have a very intense conversation about our perspectives on Jim Cramer. Which is going to be interesting. Josh, the other thing we haven't mentioned yet, it's a new year, but all of the pending cases are still pending. All of the regulatory work that's coming through the pipeline may or may not happen. And Adam, again, we'll be doing our next policy update with Adam and Dina Ellis later this month. But Josh, any thoughts or progress that you've seen, to the extent you can talk about the big cases, SEC v. Coinbase, SEC v. Kraken, SEC v. Binance? A lot still has to sort out, right?
Yeah, a lot has to sort out. I am somewhat limited in what I can say about those particular cases or certain of them. But I can say, in terms of decisions that we've seen coming down the pike just in the past, week or so, many may not have been surprised given what we saw previously from Judge Rakoff in the SEC v. Terraform Labs case originally at the motion for judgment on the pleadings, right, where he came out very strongly and sort of separated himself from the reasoning that Judge Torres in the Ripple case had put forth. But here, as many may be aware, probably all who are listening are likely to be aware, he really doubled down. And at the motion for summary judgment phase in SEC v. Terraform Labs Do Kwon, he very clearly shared his view that as a matter of law, Luna, UST, and Mir were securities, right? And he was quite clear in his judgment. He said there is no genuine dispute that UST, Luna, W Luna, and Wrap Luna, right, and Mir are securities because they're investment contracts. And so that was That's pretty big, right? Because that is, again, language that is saying that the token is a security, right?
Right.
Not just the wrapper. And of course, this is just one judge, right? They're likely, just as was said in the Ripple case, his decision isn't binding on other courts, even in the district. Now, interestingly, what was not deemed to involve an investment contract was the M assets, right? And so the defense actually won on summary judgment. The SEC had been saying, "Oh, securities-based swaps." That was the argument that they were making with these M assets, and in fact, Judge Rakoff wasn't buying it. Now, going back to UST, I think that's one of the really interesting pieces just for looking forward. Is that while in the case of Luna and Mir, that there was this idea, of course, that there existed an investment contract. Really, with UST, it seemed to be the interplay of UST, the alleged stablecoin, and the Anchor protocol, right? That would enable returns. And of course, the SEC has long referred to UST and as a yield bearing stablecoin. I think that's what the language that was used in the complaint originally. But I think that could have, now again, this case is not binding. I mean, it's binding on the parties, but the
Sure.
for precedential value, it's different. But it is very interesting to think about other stable coins that are out there and in what manner they may be used, and whether the SEC may take a view, and whether a court may take a view that in certain instances the interplay constitutes an investment contract.
Josh, it's interesting that
Sorry,
those are
I
really
had my serious face on.
no. Those are really interesting points. And again, you both know I'm not an attorney, but one of the interesting things is I read Judge Rakoff, and for the audience's benefit, just to be clear, these are very complicated or at least detailed legal conversations. Like one of the things, Josh, I found very interesting, and you probably alluded to it, was the fact that Mir, I believe, by virtue of its relationship with another token, if I understood that correctly, was an investment contract, which for a lot of participants in the ecosystem is pretty confusing. But where do you think this, David, and certainly weigh in here, where do you think this continues to go? I mean, it's not precedent, but in SEC v. Binance, the SEC literally just referenced Judge Rakoff's commentary and opinion on Terra.
Yeah, look, I think that when you looked at the facts of those tokens in particular, they kind of, it's not a surprise that Judge Rakoff weighed in the way he did. So I'm not surprised. And sure, like the SEC should use precedent that's beneficial to them and their arguments. I mean, I think any lawyer would be deficient if they didn't do that. Right. So, look, I think time will tell. But look, I think, there are some tokens out there that really have a much more of a feel of a security than a token. And again, when I say that all these assets are tokens, it's really how they're sold. So let's be clear about that. That they are all tokens, and in the manner which they're sold, really determines whether they'll be a security or not. Yep. I do want to digress to one thing because this did catch my attention today. When we were talking about the ETFs and how people will know about them, I really expect to be like a Super Bowl level marketing blitz to go on in the financial news networks when an ETF is approved. And I think you're going to see a ton of commercials. I'm going to give VanEck some credit because they're going to be donating some of their profits to the Bitcoin core developers. So I really think you're going to see a lot of advertisements and marketing as this gets approved. So I think it's going to be hard not to know that it's approved when it gets approved.
I think that's a fair point. Josh, you were going to weigh in on something. Sorry.
Yeah, I just wanted to add one more thing just about the SEC v. Terraform Labs Do Kwon summary judgment opinion, which is, one of the things that Judge Rakoff talked about was the unavailability of exemptions, right? And I think that's important just to emphasize, like for those who may be thinking about this for various reasons other than just watching, in the news, is that one of the things he pointed out was that even though sales may have been to sophisticated investors or accredited investors, right? That in order to have an exemption, a valid exemption, you need those to come to rest. There needs to be an intention that they come to rest with those purchasers. So I think that kind of raises some of the things that we've talked about in the past about whether, for example, VCs and others, whether the SEC may make an argument in the future that there isn't a good exempt offering because they're functioning as underwriters. And similarly, there was another statement that the court said that there was no evidence to support defendants' statements that secondary trading took place exclusively outside of the U.S. And so, for that reason, he said there's no valid exemption under Reg S. So these are important points as we go forward.
Yeah, and Josh, for the audience, when you're saying exemption, we're talking Reg A or Reg D exemptions for security listings, security filings, correct?
So Reg D and then
Yep.
Reg S. So Reg S, so outside the U.S., and Reg D, like generally accredited.
This is why they should listen to you and David, not me, when I just say Reg and throw a letter in there.
Yeah, there is a Reg A. I mean,
yes, I'm with you. So I think we're approaching end of time. I wanted to raise one last thing if we could. And there's going to be so much to cover in 2024. I'm so excited for what Wall Street Blockchain Alliance is going to be doing, and I'm so looking forward to working with you both again. The other thing, David, one of the news items that hit me over the holiday was FTX customers in the bankruptcy process, which is going on. And I think, correct me if I'm wrong, or someone in the audience, please correct me if I'm wrong. They're pegging the value of remuneration to customers with Bitcoin at something like 16,000 or so. A lot of people don't understand the complexities of bankruptcy, David, and I know that's one of the things you understand deeply. Does that make sense? Should people be upset about that?
So I don't want to talk to FTX specifically, but
Sure.
In general, the assets are priced at the day of filing. So the cash equivalent of the cryptocurrency that was part of the bankruptcy estate is valued at the day that they filed for bankruptcy in fiat.
Right.
So I can see that there's a lot of consternation with people who have been holding and watching their crypto go up in value and, wanting to be paid in kind and wanting that same amount of crypto being paid in kind. And, it's a really, I wrote a bankruptcy article with Steve Rudenberg and Pulcinelli, talking about bankruptcy, but it's a really challenging issue, but that's the way the bankruptcy laws have been written. So the way I would look at it is that, if as crypto increases in value, the total estate will increase in value, and the percentage that people will get, based on their day one filings will increase. So it is accretive to everybody on the whole. It just doesn't feel great if you're holding a lot of crypto and it would be worth significantly more if it was returned to you in kind. So it's kind of a double-edged sword, but I totally understand people being frustrated if they had 5 Bitcoin on a bankrupt platform and Bitcoin is now worth 2.5x what it was worth when they filed for bankruptcy. I totally get that.
Imagine how the folks actually potentially now getting payouts off the Mt. Gox collapse.
I was just gonna say that it's a tale as old as time in crypto.
Yep.
The wanting the in kind versus the
Yeah. And as Tuan made a comment, I'll reference. It's very unusual in a sort of restructuring to see assets increase in value so substantially. So this is really like an anomaly on so many levels. And it's just an unfortunate byproduct of the bankruptcy system. But again, the one caveat is that the value of everybody's claims on the whole, will go up significantly based on the, increasing value of the crypto.
Absolutely. We're just about out of time. David, Josh, Happy New Year. It's good to see you both. It's the end of the first week of a new year, and there's a lot to do in 2024, so I'm looking forward. Josh, what are you looking for in the coming week before the three of us meet again next week?
In the coming week? Well, I guess I'm waiting to see whether the ETF does get approved. That's for sure. But I think more broadly, I'm going to be working. It's very busy.
It is.
I would say in a good way. And I think also just catching up on cases. I want to look more into the crypto tax that's come into effect, because certainly familiar with it, but I want to read some of the Coin Center publications and other
Yep.
things that are out there.
Coin Center does a great job. I just want to backtrack 1 second. David, you mentioned the chapter you did with Steve Rutenberg, Global Legal Insights. It's an amazing chapter. It's an amazing book. A lot of WSBA members contributed. Check it out, our friends at Global Legal Insights. WSBA members get a free PDF of this 600-page guide. So if you want to read David, be a WSBA member as well. David, what about you? What's next week or two looking like for you?
So this next week's going to be really exciting. So for starters, I'm flying to Houston tomorrow to go see the Bowl Championship Series and to see my Michigan Wolverines beat Washington on
Woo!
Monday. So I'm really excited about that. You don't often get to see your school like play for the actual national championship. So there wasn't any way I was going to miss that. I'm really curious to see the price action in the next week, both for Bitcoin and for altcoins. Like Josh, I'm very busy too and doing a lot of reading and work, and there's a lot of interesting projects we're doing at FTI. So that's keeping me very busy. But I think this is going to be a really, really interesting week next week in crypto.
I agree with you, David. I'm not doing anything nearly as interesting. I will be deep diving, wait for it, into the Department of Treasury's IRS $10,000 reporting for crypto transactions, which is making heads explode across the ecosystem, both with the challenges of it and how the heck are we supposed to implement this? So stay tuned. We'll probably be talking about that next week. Welcome back, David, Josh. It's great to see you both. For everyone who tuned in, again, thank you. Sophie and everyone else, Happy New Year. Good to see you all. We'll leave it there. See you same time next week.
Sounds good,
Bye-bye.
guys.
Yeah, everybody.
Happy New Year.
Happy New Year.